With US 30-year mortgage rates tickling the 5% mark, I wanted to have a look at stocks that are closely correlated or sensitive to mortgage rates, including stocks, i.e. companies of home builders. And you can see here where US 30-year mortgage rates were only about 3% just a couple of quarters ago. In late summer of last year, 2021, we're now 200 basis points, 2% higher. So that's a big move, and that is likely going to get people to spend less, buy fewer homes, and so on and so forth. So to kind of paint this picture a bit differently, I wanted to have a look at a stock called Toll Brothers. This is a home building stock. And you can see that all else being equal, the stock had a really good opportunity to start breaking out higher. And it actually did break out higher there in January of this year, but ultimately failed. In fact, if I make this a monthly chart, this becomes even more pronounced. And you can see once the chart actually comes up here that we didn't have a whole lot of conviction above that trend line, all that multi-year resistance line that goes all the way back to 2005 and over just a short period of time ended up breaking back below. So we could call this potentially a double top or some sort of a larger distribution with a breakout fake out, right? A breakout that took place but ended up being a fake out. This happens all the time, perfectly normal. So from our perspective, with considering what the Fed is doing, what we are seeing from a fiscal, monetary perspective, the liquidity that's being withdrawn from the system, the inflation that's in place, and again, this is very much done on purpose, if you will, by central banks to slow the economy so that inflation does come down because they see it as unacceptably high. So that gets us to Toll Brothers and maybe even XHB, which is an ETF that tracks some of the more housing sensitive stocks. And we actually think that these are probably better sells here through a multi-month, multi-quarter lens. You can always get a bear market oversold rally for sure, but in the bigger picture, we do think this is better to be stayed away from. Now, I'll show you guys what we're seeing on the market rover. And the market rover, you can see, if I bring up this chart here of the XHB ETF, you can see how beautifully clear it went from a neutral trend into a bullish trend in August of 2020. That's the green background. And then it wasn't until mid-January of 2022, so 46 or so percent higher, where the market rover told us, hey, this bull trend is over. And so that's how the market rover was able to avoid a nearly 20% drawdown now from that point. So a very, very powerful way to respect the trends. And, like I always say, a trend following tool is only as good as its ability to not only get you in of a trend, which, as you can see, the rover did very clearly in August of 2020, but also be able to get you out. And if you're wondering what these buy signals are along the way, those are simply trading buy signals, like swing trading buy signals, which is very different from a buy there from a trending perspective and selling here. And as I always say, yes, you can definitely make money trading along the way, but respecting the trend, buying here and selling here usually ends up a much more profitable endeavor. Hope it helps. We'll see you again soon.